You guys, it is that time of the week. On Saturday, we have a new team with us. We got Zephyr boys in the house. We're going to be having lots of cool things we're going to be showing you. But let's get this introduction out of the way. We're going to kick it to Kenton, and then we're going to get this party started, you guys. For those who have not heard, THORChain is the world's leading Bitcoin DEX. You can swap 13 different blockchains across 41 different pools without using bridges or wrap tokens. Check it out at swap.thorchain.org, swap.thorchain.org. Anyone in the world can use THORChain. There's no account to open, no KYC required, and privacy is a human right. THORChain has two tokens, Rune and TCY. The fees for swapping on THORChain are paid in Rune, and that's where the yield comes from. The fees are deducted from swaps, so you don't need to own Rune to trade on THORChain. The Rune token is also deflationary, as 5% of the fees are burned. 10% of protocol fees go to TCY token holders. Remember to stake the TCY tokens in order to collect this yield. There are no block rewards on THORChain. The protocol's fees are real money paid by real users. THORChain is more than just a DEX, you guys. It's a programmable layer 1 with the ability to create smart contracts and dApps. This app layer is being developed by Regira. If you need help with THORChain in general, please join the THORChain community Discord and Telegram group. Links for those are on thorchain.org, thorchain.org. And on thorchain.org, you can also join our email list. It's the best way to stay up to date with THORChain, and we're going to be adding lots of cool things to that in the future as well. And always remember, you guys, this podcast is for information and educational purposes only and does not constitute financial investment or legal advice. And the THORChain community does not endorse or condone illicit activity of any kind whatsoever. And with that out of the way, hello, everybody. I'm hoping lots of cool Zephyr kids are going to be watching this episode. My name's Denny. I go by Patriot Sounds Online. I've been educating THORChain for going on 6 years now. I love THORChain. I love what we do. And I'm really excited to learn about Zephyr. With that being said, Kenton, I'm going to kick it to you, my friend. How you doing?
Good, thanks. Yeah, and the audience, there's some audience members trying to join the stage, the studio to speak, and we're denying you. I don't know if this is an accident or not. You guys can listen. You don't need to click on that link to listen. If you do want to, if you are intending to come up to speak, to ask questions, whatever, please just give us a bit of time. Let's get the introduction of Zephyr out. Get that going. Let them talk for a bit, and then we can open the floor for questions. So yeah, hopefully you guys just be patient with us. But yeah, doing good. The looks like 3.19. You mentioned, Denny, off just before we started, that all the nodes have approved it except for one, and it's the same node that was holding us back on 3.18.1. So yeah, we do some we got to take them all back. Beat them up with a sock full of rocks or something.
Yeah, if they're on the West Coast, let's meet up. I want to fight. Really?
Yeah.
Go ahead, Kenton.
Do some social pressure on them. So I assume the same as before, probably just sleep at the wheel. But 3.19 is what we need to basically fix everything, get things going again. And so I believe once that should get approved, it should go live on Monday is the plan. And then we have all of next week to go through the steps to get through trading again. So I hope, correct me if I'm wrong, Denny, but I think if everything goes well, we should be trading by the end of next Friday, like a week from now.
That is my understanding. Yeah, we got a churn. And then once everything checks out, count balances, everything like that, there's a 11, 12 step process, whatever it is. And then we should be good to go. Let's hope. But guys, keeping room for your heart in case some issues. This has never happened before. So please just be open if something bad happens. Go ahead, Kenton.
Yeah. No, that's great. Thank you. And then kind of marketing wise, I found another scam website I got to take down. You mentioned newsletters, kind of putting I spent all day yesterday trying to fix it and clean it up, and so that it's good to go. So hopefully, I don't know if next week, maybe. I think we want to do it once a week, and I think every Wednesday. I don't know if it'll be ready to go next Wednesday, but definitely it's got to be ready the Wednesday after that. So just be patient with us there. But that's going to be a recap. So the blog posts, Ray Analytics, summaries of these podcasts, Any articles about THORChain are out there in the media? Any positive articles? Some like posts, video clips of this, just basically a summary of THORChain over the past week. And, over the years, we've had people, kind of complain that there needs to be like kind of like one source, one kind of definitive way to get info from THORChain. Is it Discord? Is it Twitter? Is it Telegram? What's the best place? And so we want to make the email like a one kind of like aggregation of everything that's going out on all these different platforms, put all into one, try and get all the highlights, all the important stuff. So if there's only going to be one thing that you look at for THORChain, it should be this newsletter. I'm not saying don't follow THORChain anywhere else or anything like that, but there'll definitely be stuff we don't cover. But the goal is to summarize it all, put it all into one thing, so that if you can only do one thing a week, this should be it. And then Chad had a good idea about having that same content go out on Telegram or Twitter or YouTube or whatever. So I'll look into that. So, but yeah, so it's just this newsletter is kind of like the final puzzle piece in our social media strategy, just like kind of have THORChain everywhere. And so no matter which way you want to interact with THORChain, you can. So yeah, so hopefully that'll be done here soon. And then, yeah, that's about it. Nothing much else changed since Thursday. So, I'll kick it over to Goose and Dr. Future. If you guys could, give us a little bit of an introduction on yourselves, your journey in crypto, and how that led you to starting Zephyr. So I'll let you guys fight over who goes first.
I'll take the reins first. Hey, Kenton. Hey, Denny. Yeah, it's great to be here. So really appreciate you guys having us on. Let's see. Where did I start in crypto? I guess it was back in 2017 for me. I've been working as a video producer, an animator, a cinematographer for pretty much all of my professional life. I was working at a broadcast studio, and it was a sort of a tech broadcast place. And I remember seeing a book, like a heavy tome, and it was like some sort of crypto 101 book. It really surprised me because none of the journos seemed to care at all, and they're supposed to be covering tech. And I had always heard about crypto like for years beforehand. But anyways, needless to say, I picked it up. I read it voraciously on the bus home, and then I dived into crypto in about July of 2017, right before the massive run-up of that year. And then, yeah, I've been here ever since. In terms of getting started with Zephyr, so I joined the project shortly after I became a holder shortly after its inception, and leveraging my sort of background doing animation and marketing and video production, I produced some videos for them, and then over time, as the years went on, I sort of parlayed it into now I'm their marketing lead. So yeah.
Nice. Welcome,
Cool.
Dr. Future.
Awesome. Thanks.
Dr. Future, is your mic working, buddy? I cannot hear you. Okay, we might having some. Okay, looks like we're having some.
You're stuck in the future. We got to get you back in the past.
I got back to the future. You went there, sir.
Yeah.
Come back to the timeline.
All right. Well, while we get that, sorted, Riverside sometimes has bugs. Goose, we'll kick it back to you, and then we'll get going. And then once Dr. Future just say something, and then we'll get you going right back. So go ahead, Dr. Goose. Maybe now we'll just go right into it.
Goose, maybe you can just give us who's Dr. Future.
Oh, I'm sorry.
Yeah.
Okay, yeah.
You can introduce him.
Yeah, sure. So Dr. Future, he's one super sharp guy. He's a very active member in the Zephyr community. So he puts out video content that unpacks the mechanics and the game theory of the protocol. And he's also shipped various tools for the ecosystem. So yeah, between us two, pending a working microphone, we should be able to go as deep as we like today.
Dr. Future, there's a studio chat where we can chat amongst ourselves. You're going to have to leave the studio and rejoin, and then choose your mic before you join. Once you've joined, you can't change your mic. It's stuck. So you have to leave and come back.
Yeah, no big deal.
Oh,
Cool.
he's got it.
Yeah. All right, very good.
Cool.
Well, he gets that sorted, Goose. I am so excited. I am new, okay? So I am super excited to learn all about Zephyr and what it is. So maybe I'll kick it to you. What is Zephyr Protocol? I believe that's how you say it. Floor is yours,
Fresh eyes. Yeah. Well, I'll jump back just a little bit. So just for a bit of backstory as to how this whole thing sort of started. So I quote tweeted JP a few months back, and I gave Zephyr a soft plug after, he was talking about the Monero integration that you guys are rolling out. And Kenton, you replied with something like, let's make it happen. And you tagged Randy. And so after a little bit of back and forth, I actually had a call with Chad and Randy, and I gave them the rundown of Zeph, and how it would make sense for THORChain to support it, obviously after XMR goes live. So yeah, because Zephyr is basically, it's a fork of Monero, and basically this conversation wouldn't be happening if there wasn't such exciting news that you guys are rolling out Monero. So yeah, I can share my screen because I think it helps to have a bit of visuals before we dive into what Zephyr is.
Please do.
Yeah, let's see. All right, you guys can see that?
Yep.
I can, yeah.
All right, cool. So Zephyr, at its heart, it's an untraceable stablecoin protocol. So it's a proof of work, private layer 1, built on a fork of Monero, and it inherits all its same privacy features, but it expands upon that. So we've added in a dollar stablecoin, a yield system, and a reserve mechanism, and it's all native to the chain. So essentially, Zephyr has 4 assets. You've got Zeph as the base collateral, ZSD is the dollar peg stablecoin, ZYS is the yield-bearing token, and ZRS, which is the red one there, that's the reserve share, and that acts as your equity and leveraged exposure to the reserve. So it's a stablecoin that's over-collateralized. It's actually survived a 95% crash of the collateral without ever coming close to losing peg. And unlike most yield-bearing stables, the yield here is coming from proof of work block emissions. So not from lending, not from leverage, and it's structurally sustainable. So that's the elevator pitch, I suppose, for Zeph.
Can I just stop 1 sec? The R coin, that red coin, the R,
Yeah.
our audience might recognize that. That is the exact same logo of Ray Analytics. But you guys are definitely not related. They're completely different. Right?
That's
so
right, yeah.
I'll point that out to our community.
Interesting.
How did you get that R? Where is that a common? Did you make that up, or did you find it somewhere? Or
that was already at play before I joined the protocol, but yeah, it was just the asset logo that was there when I started, and same with the dollar sign and the Y. But yeah,
I wonder if you guys pulled it off Canva or something. But anyway, we have Dr. Future. Are you back to the past?
Yeah, I made it back. Appreciate it.
There you go. Right, welcome.
Welcome.
Headphones issues sometimes. So appreciate your patience. I'm really happy to be here. Thank you so much, Denny and Kenton, for bringing me on. And thank you, Goose, for doing it and introducing me.
Dr. Future, you got a little staticky on your mic there.
Okay.
Maybe adjust the distance you're speaking. I don't know. You sound beautiful for porn.
Yeah,
but...
good call. Perfect. Okay. How's this?
That's better.
Okay.
That's better.
Yeah. I think I adjusted the mic there a little bit. All right. Well, yeah, I'll just let Goose continue.
No, it's so bad.
Nah, can't do it. Can't do it, man. Try again.
Okay.
We'll figure it out. Okay. Go ahead and leave and rejoin.
Wasn't your mic working before we started?
Yeah, it cut off and it didn't let me switch. It was weird. I'll rejoin it.
Okay, sounds good, man.
All right, thanks, buddy.
Goose, continue, bud. Oh, no problem. We'll figure it out.
Yeah, no worries. Let's see. So I guess in terms of let's talk about the ethos for a second. So zooming way out, I think it matters, why does Zephyr exist in the landscape at all? So crypto's it started with cypherpunk roots. And I think you THORChads can all relate and appreciate this. So the whole point, Bitcoin's white paper, the cypherpunk mailing lists, It was all about permissionless and censorship-resistant private money, essentially, that, no government or no corporation has an off switch to. At least that was the founding promise once upon a time. And yet somewhere along the way, the industry has drifted miles from that, because most of what we call crypto today is fully transparent ledgers, and you've got KYC on every single on-ramp, and the stablecoin giants, they're all controlled by, a handful of companies who we've seen they can freeze your balances arbitrarily. So in many ways, the industry is sort of just a rehash of, the surveillance financial system, except it's got a neat little blockchain wrapper on it. So fundamentally, we think that's not how any of this was supposed to be. And a common misconception that people have on privacy is that it means you're hiding something, but it's not. It's the architecture. If you look at cash is private, and your bank balance isn't broadcast to the world. So the fact that crypto made surveillance the default, well, I think that's the bug, not a feature. So yeah, privacy is not paranoia. It's really just how money is supposed to work. And so,
yeah, we've been, as a society, as a world, we've been so conditioned to accept not having privacy. The idea 100%. Of wanting or expecting it is perceived as criminal. You're doing something wrong. It's perverse, absolutely perverse. And so yeah, you definitely are barking up the right tree here.
Yeah, and I'll just add on to that. Privacy is necessary for society to function. KYC, again, guys, it is dangerous. People are getting hurt, wrench attacked, especially saw in France, 40-something people getting wrench attacked. This stuff happens all the time. Privacy is a human right. It must happen. So I'm really glad you guys are definitely for this. This is the correct ethos, and it's the only way. But I'll kick it back to you, Goose.
Yeah, I figured you guys would vibe with that sentiment for sure. So yeah, look, when we look at stablecoins, I think they're the single biggest use case in crypto. So despite the narratives that come and go, by actual usage and by settlement volume, stablecoins, well, they are the product. You look at the trillions of dollars in volume that they facilitate. They're the thing that crypto has actually got right at scale. But look at what dominates, right? So it's Tether, USDT, and you've got Circle's USDC, and they're centralized. Meaning there's a company and there's a freeze function and there's a blacklist if they so choose. And just recently, we've seen the largest asset freezes in the stablecoin history, and that happened at the contract level. So hundreds of millions just got frozen, and there's sort of no recourse. So I'm not here to dunk on.
Are you talking about Tether freezing? It's like $380 million of Iran's money or something like that. Is that what you're talking about?
Well, there was that one of many. Yeah, I think Denny, you posted about that as well. But yeah, it's kind of crazy what people have sort of just allowed to happen. But yeah, I'm not here to dunk on any specific company. Because I'm sure, they'd argue why they do it, and they would cite regulatory compliance or otherwise. But it does tell you something structural, and that's that the biggest use case in crypto, stablecoins, they're running on rails where someone has an off switch. So that being said, the Holy Grail, the thing that crypto has been trying to build since 2014 or so, it's a stablecoin that's actually decentralized and actually stable, and ideally one that would pay real yield on top of it. But that combination is sort of the killer app that no one has fully nailed just yet. And we know that there's enormous demand for it because we've seen it. There's historical precedent, even when someone ships a broken version, right? So I'm sure everyone remembers Luna and UST, and at its peak, it was a 40 billion plus behemoth, and they had Anchor, which was their yield, the yield part of their protocol, and that was paying about 20% on a decentralized dollar, and we saw the capital absolutely flood in. So huge demand there. It's just that their execution ended up being a death trap. So here's the difference. UST was backed by Luna, and the protocol could essentially mint infinite Luna to defend its peg. So the moment there was any sort of cracking...
Goose, you cut out there.
Okay.
Can you start over again? Sorry.
Yeah, so did we talk about Anchor? Did you get that?
15 seconds ago. 15 seconds
Yeah,
ago.
just 15 seconds ago. Just your new line of thought. Can you just restart it?
Okay. So Luna the idea was good, decentralized stablecoin that pays yield. It's just that their mechanics ended up in death spirals. So the difference between Luna and Zeph, so basically with Luna, they had UST and it was backed by Luna. And basically their protocol could mint infinite Luna to defend the peg. But the moment any sort of wavering happened in confidence, it minted into oblivion. They had hyperinflation, it death spiraled, and then it ultimately went to essentially zero. So mechanically, the collateral was unlimited, and it was like the snake that ate its own tail. Yeah, the system ate itself. But with Zephyr, here we go. But with Zephyr, it's the opposite on a structural level. So with Zeph, the collateral is Zeph, it's proof of work. It's hard capped at 18.4 million coins, which is the same as Monero. But crucially, you can't mint infinite collateral. So that means every dollar of ZSD, the stablecoin, is over-collateralized. You need a minimum of 400% backing to mint a new one. So where Luna got weaker as more people entered, Zephyr actually gets stronger because of the heavy over-collateralization rules. So structurally, it's not possible to have an infinite mint death spiral the same way algo stables like Luna had. So Zeph has finite collateral, it's over-collateralized, and it's actually formally verified using the JED framework, which we can touch on in a little bit. But yeah, that was one of the key lessons from Terra, that algo stables, they don't work, but over-collateralized ones do. Kenton, you look like you want to...
I do have a question. I thought Monero had an infinite supply. I thought...
Well, okay, so yeah, it's 18.4 million until tail emissions, and then it's perpetual tail emissions to keep miners incentivized to secure the network. So yeah that's the same mechanics as Zeph.
Okay. And then you're going to have to walk me through this math. So Zeph has a value, which can fluctuate. And then you have your stable coin, which is fixed at $1. So, walk me through it one more time. It's early for me.
Maybe I could walk you through it a little bit if that's okay.
Yeah. Dr. Future,
can we... this time?
You sound so beautiful, Dr. Future.
That's awesome. Thank you so much. Appreciate it. So you can think about this like you have a bank account, right? And the bank account is protocol controlled. So it's decentralized. It's permissionless. Nobody controls it. It's just built into the Zephyr blockchain. And it holds the collateral that backs the stable dollar. And so you could have, if you have $200 in the bank, but you have a $100 loan, then that's 200%. So really, when it's above 800%, that's when you can't put more money to kind of collateralize it. And that's what ZRS is. It's basically a note that says, hey, if you add some Zeph to the bank account, we'll give you ZRS, and then you'll get some type of reward as a result of that. And in doing so, they monitor, the blockchain itself just monitors what's the collateral percentage. And then the rules will say, well, you can't mint more stable dollars below 400%. And it's just a system that's automatically run.
So, but this is all based on the value of the Zephyr token.
Yes, that's exactly correct. So you're putting Zephyr into the bank account, and then if the price of Zeph goes up, so even if there's, let's say, 100 Zeph in the bank account, if the price is $100, right, then it's going to be $10,000 of value or whatever. And so, but if the price goes up to $1,000, then it's going to be $100,000 of value. So then you can mint more stablecoins. So the thing is, as the price of Zeph goes higher, you'll be able to actually mint more stable dollars, which is why I'm a very enthusiastic community member of Zephyr is because I'm interested in what could happen if the Zeph price goes higher. And keep in mind, it's proof of work, right? So as more Zeph is minted, every time a block comes up, which is every 2 minutes, it's going to actually provide a little bit of reward to ZRS holders and to ZYS holders. And I'm sure we'll get into that. I'm getting ahead of myself.
Yeah.
But as the price of Zeph goes higher, then you can mint more ZSD and people are able to kind of engage with the protocol more.
Yeah, I think...
and then, go ahead, Goose.
Yeah, I think what we'll do is we'll go, there's 4 assets in Zephyr, and we'll break them down one by one, because I know we're throwing out a lot of acronyms here, and if you're a newcomer, then it could be a bit confusing.
And I have to go slow from my boomer brain. So, okay, and I always have to think, how does this break? What's the worst? Once I know how it breaks, then I know how it can succeed. So, Zephyr price goes down, I'm not able to mint any more stable coins, and I'm not able to redeem them either.
You can always redeem them. So you can always redeem the stable coins. If the reserve goes below a threshold of 400%, then the people who have put their Zeph deposited into the reserve, they can't redeem that. But stablecoins will always be redeemable, because essentially they're the liabilities of the system. So if you redeem it, you're minimizing liabilities, which makes the protocol stronger and increases the reserve ratio.
But if the Zeph price goes down, I don't know, 80%, then are the dollars then all under collateralized? How do you?
Theoretically, that could happen, but we saw in 2024 a 95% drop in Zeph over the space of a few weeks, and the lowest the reserve ratio got was about 250%. So, I mean, that's one of the most extreme real-world examples, and yet the peg held. But yeah, okay, if the price kept going down, well, that's any project would suffer like. Yeah, essentially it can be under collateralized, but to date it's never happened, even with a 95% drop.
Okay, so this is the beauty of your guys' design, is that even with a 95% drop in the token price, you're still over collateralized. And that's the goal, no matter what, to always be over collateralized.
Yeah. And I mean, 400% is a very conservative ratio. You know, it's quite capital inefficient, but when you're talking about stable coins, the one thing you actually want is stability. So it pays to be conservative and slower paced, because we've seen what happens when things aren't collateralized enough. You know, any swing in the market can just lead the whole thing to blow up. So Zeph has taken a very cautious approach, and it's paid off to date.
Yeah. Also, maybe I could just add a little bit of color to this. This rule here is called the JED mechanism, and it was actually formalized by like IOHK, which is from the Cardano Foundation, and like Emergo and Ergo Foundation. So like in 2020, they basically developed this out. And so the rule here, the reason that it never depegs, right? And by the way, this JED stable dollar mechanism is not the first, like the Zephyr version of it isn't the first. There's, I think, 3 other iterations that were developed prior, and none of them have ever depegged. And the reason is because the stable dollar is very over collateralized. So like for Zephyr right now, it's 350% or something like that. And so the price of Zeph would have to come down 75%. But as the price comes down, the ZRS token, which people can get, which collateralizes the stable dollar, becomes much more appealing. And that's basically how they designed it. So they figured out a way that as the price of the collateral drops, they'll offer offer a note that's even more volatile, that will have much higher upside than the collateral itself. And so in that way, people will get that ZRS. And in order to do that, they have to add Zeph to the bank account, which collateralizes the dollar. So the ultimate effect is that as the price of Zeph drops, the stable dollar will have more and more collateral being added to that bank account to back it up, because people will be interested in getting ZRS, because it will be a very good play. If Zeph even goes up a little bit, ZRS will go up even faster. And I'm sure Goose is actually going to explain that a little bit more. But that's kind of how you think about it, is as the collateral drops, ZRS incentivizes people to add Zeph to collateralize that stable dollar more. And that's exactly what has happened, and it's worked very well. Exactly.
Yeah, so I think it makes sense for us. Let's dive into the 4 assets that make up the protocol, because I'll talk about how it works, because I know the 4 asset thing, it confuses people the first time. But yeah, so every stablecoin protocol you've heard of generally has 2 tokens, right? You've got the collateral and then the stablecoin. Zeph has 4, because you'll see that each one solves its own unique problem. And again, it's very, very heavily interconnected. So yeah, just to recap for you guys. So Zeph is the base coin, the collateral, ZSD is the stable dollar, ZYS is the yield share, and ZRS is the reserve share, or the equity layer. Okay, so collateral, dollars, yield, equity. Okay, should have probably had that slide earlier, but that's okay. All right, so Zeph is where it starts. So it's proof of work, like I said. It's mined using the RandomX algorithm, is the same algo that Monero uses. This means anyone with a CPU can mine it. Hard cap of 18.4 million plus the tail emission after that to keep miners paid and incentivized to secure the network. And every Zeph transaction, by inheriting Monero's features, it's private by default. So we have ring signatures, stealth addresses, bulletproofs. We didn't reinvent the wheel there. That's inherited because Zephyr originally forked Monero's codebase. But Zeph, so it's not just a privacy coin or an untraceable store of value. It's the collateral. So like we said, every ZSD stable is backed by Zeph inside the reserve. And the block rewards from mining, they're actually feeding the yield pool, which pays the ZYS holders. So Zeph, it's doing a few jobs all at once. It's the private store of value, it's the collateral, and as it's mined, it becomes the central component for the yield engine. Okay. Yes, so ZSD. So, all right, as the name, it does what it says on the tin. As the name suggests, it's a stable coin. It's pegged one-to-one to the US dollar. It's fully decentralized, meaning no centralized issuer. No one can freeze your funds. So it gives users complete anonymity. It's basically, it's the true version of digital cash, except, well, it's the true version of cash, but yeah, in the digital space. So the peg works through over-collateralization. So to mint one new ZSD, there needs to be at least 4x its value of Zeph inside the reserve. Future touched on this, right? Think of it, if you want $100 of ZSD minted, there needs to be $400 of Zeph to backstop that. So that's the floor. 400%. The 400% reserve ratio is the floor for minting new stables, and that's as per the JED framework. So yeah, like, I guess the question is, why would you over collateralize instead of do an algorithmic sort of setup? It's because Zeph is volatile collateral. So you need a buffer so the dollar can always be redeemed for a full dollar's worth of Zeph. And like we said, that 400% is a huge buffer, and we have the historical evidence to prove that it works in the real world. So, like I said, 95% crash in a couple of weeks back in 2024. ZSD held the peg the entire way down. To the best of my knowledge, there's not any other stable that has faced anything, near those market forces, at least, and lived to tell the tale. So yeah, it's not just a theory on a white paper. Like we've done the real world stress test and came out the other side. So just
Can
to
you
give you
well,
guys,
can you give me some market caps? Like what that 95% drop, what market cap did you stay at, and then what did you end up at? And how much, and what was the market cap of the ZSD?
yeah, so back when the drop happened, so Zeph, it peaked at around 120 million market cap, I believe. As for the stables in circulation, I think it was about 2 million at the time. And then it's gone down to, I can't remember what happened in the 2024 crash, but now the current circulation of ZSD stables is about 370K. So it's small. And we're actively working to ramp up that number. So the thing back in 2024 and the earlier days of the protocol was there wasn't a huge underlying adoption of the stablecoin. And that's why, so when it ran up, when Zeph, the collateral ran up heavily in price, there wasn't sort of anything to backstop that. Like we weren't seeing the usage of or adoption of ZSD. But we have a sort of an ace up our sleeve as to how do we get ZSD adopted, which we'll get to in just a little bit. So right now we have 370K ZSD circulating, and the reserve ratio is just below the 400% floor. So as of today, it means you actually can't mint new ZSD from the protocol. But again, that's how the protocol protects the existing ZSD holders. So it's not going to dilute anyone further by backing more ZSD. So to open up, if you want to mint more stables again, either the Zeph price increases and or more Zeph will be added to the reserve by users. So yeah, it's the protocol saying bring more collateral before we issue more dollars. Future, do you want to jump in anywhere there?
Yeah, I mean, maybe I would just quickly point out that in order for there to be more stable dollars, the price of Zeph has to go higher, or more Zeph has to go into the protocol reserve or that bank account, which is the blockchain. I just call it a bank account because it's easier for people to understand, but it's the protocol, it's, you know, the decentralized blockchain itself, the mechanism. And so, you know, there's only so much Zeph, it's finite. So, you know, at some point you can only fill it up so much, and it's got a lot in there. It's like 35% of all Zeph in circulation right now is in the account. So, you know, the other thing that can allow people to make more stable coins is the price of Zeph has to go higher. And, you know, right now the amount of stable coins that are minted is tiny, like ridiculously small. And if we're looking to actually make this be a competitor to other stable coin projects, then we need more stable coins. And in order to do that, the price of Zeph has to go higher. And that's really kind of what we're looking at. And so the question becomes, well, how do you help the price of Zeph go higher? And so, you know, Goose will get into that.
Exactly. So yeah, so we want to increase the circulation of ZSD. And you know, coming from the sort of ethos and the principle perspective, I always thought, and many of us in Zephyr thought, hey, a decentralized, over-collateralized private stablecoin, that's compelling enough, right? Well, not for the majority of the crypto market, because they clearly want something more other than sound money and a cypherpunk ethos. Financial incentives at the top of that list. So the devs for Zeph, they thought, you know, what if there was a way to continuously start earning yield by adopting and holding ZSD? So that's where the Zephyr yield share, or ZYS, came in. So this is the missing puzzle piece that really incentivizes adoption of ZSD. So the simplest way to describe it is basically you stake your ZSD and you receive ZYS, which is your claim on the yield reserve. So ZYS is a non-rebasing yield token. If you guys are familiar with wrapped staked ETH, it's a similar setup to that. So you don't actually get more ZYS over time, but each ZYS gets worth more over time, and that's measured in the stablecoin. So by design, it only ever increases in value. It's just the only variable is how quickly it increases in value. So I know it's a bit text heavy there, but maybe you could probably pay attention to the right side of the screen. So how does it work? So every block that the Zeph miners produce, a slice of that block reward, 5%, gets converted to ZSD stables, and it's deposited into something called the yield reserve. So if you remember, the block rewards are paid in Zeph. So this means depending on Zeph's market price, at the current time, that 5% will either be worth more or less in dollar terms. So that's a continuous inflow of ZSD with every block. So it's increasing the total value of the yield reserve, and in turn, that makes each ZYS worth a bit more. So the rate of ZYS to ZSD is just grinding up every block. Oh, there you go. Yeah, you can see it. So yeah, since the start, it was at 1-to-1, and as of yesterday, it's 1.91, which means that's a 91% increase. There's a 91% APY all-time return since its inception in October 2024. So if you had put 10K back in October 2024, you'd have 19, a little over 19 now. So that's not too shabby.
Maybe I can jump in here a little bit as well, if that's okay.
Yeah.
Yeah, you can stay there. That's perfect. So if you go to like CoinGecko, for example, and you type in savings DAI, this is one that people might be more familiar with. And if you look at the chart, if you just go to like max or 1 year or whatever, you'll see that.
Let's go. Let's look it up. Can you guys do it on your screen? Go to CoinGecko.
Totally.
Yeah. So
Goose, do you want to I could actually share my screen. So yeah, while I'm doing this, here, actually perfect. Share screen.
the Goose, you have to stop sharing, Goose, I think.
Oh, gotcha. Yep.
And we'll bring you right back up, buddy. Love it.
Uh-oh. All right.
There you go.
Yeah, so basically you can see it only trends up, right? This is savings DAI, it's SDAI. So basically because of that, right? This is DAI is a stablecoin if you're not familiar, right? So basically this savings versions of DAI is like a pool of stablecoins that just goes up, right? And as a result of that, the price just goes higher and higher and higher for savings DAI. And ZYS is basically the same concept. It's a pool of stable coins, and more stable coins are added to this pool over time. And as a result, the price will go higher and higher and higher.
And so, sorry, is ZYS supply fixed?
The supply is not fixed for ZYS.
But it grows at a slower rate than what is deposited into the pool?
Yeah, so that's where it could get a little confusing. So basically, in order to get into the ZYS pool, you have to add ZSD. And so basically, it's like if I go to a public pool and everybody's swimming, I can only join the pool if I bring my own water. And then when I leave that public pool, I can bring my amount of water out. And so the same amount of water stays in that public pool. But because every 2 minutes from every block emissions, there is actually more water getting added, it's trickled in, right? It's 5% every block. So if the block is worth $100 of value, every 2 minutes, $5 is paid to the ZYS holders. And it's split amongst them proportionate to their share of the pool. So every 2 minutes, more water is added to the pool so that by the time I'm done swimming in my pool, in the public pool, and I leave, I'll get a little bit extra according to the proportion of water that I brought into the pool when I joined. When I leave, I'll get my original amount out, plus the little bit of interest that I gained as the pool grew, and the pool will never shrink as a result.
Okay.
Yeah, and I guess the differentiator with Zephyr's yield is the yield source. So as we mentioned, it's coming from the proof of work block emissions. When you look at other competitors in the space, they like Athena, SDAI, Ondo, and Aves Lending, those yields are coming from somewhere external. So it could be funding rates or T-bills. And we know that these sources can stop or even go negative when the market shifts. So it's quite a sustainable setup we have going here.
Yeah, I like the fact that it's not algorithmic. I've really come to the opinion that an algorithmic stablecoin is probably not possible just because the state of fiat itself is so terrible, right? And so I think overcollateralized is probably the best mechanism. I really can't figure it out how you could do it. So I'm definitely much more comfortable with that model. Maybe Goose will reshare your screen. I was loving those pretty. There we go. Yeah, I love the pretty slides.
Yeah.
I do have a few questions from the audience, but I'm going to wait till it's a more appropriate time to ask them. But continue on, good sir.
Okay, sure. So yeah, here's where it gets better. So every dollar of ZSD that goes into the yield reserve, it's preceded by additional Zeph going into the main reserve. So try and bear with me. This is why I prepared graphics, because it helps to visualize. So this yield backing, it's evening out at a 7-to-1 ratio. So every unit of yield ends up with 7 units of collateral backing it, which is a very conservative system. So this is purely to ensure the stability and sustainability. Because it's not very useful to have something which delivers a high APY for just a month or two. This is designed so that users can stay in their yield position for the long term. So another way to think about it is that the protocol is overfunding its own yield. So it's not extractive. It's just a side product of the system that's getting more over-collateralized over time. So yeah, the yield setup is actually strengthening the protocol. If people want to obtain more yield, then more Zeph is getting allocated to the reserve, and it's actively strengthening the reserve ratio. So I haven't seen any other. Yep.
I'm sorry. I think that's the correct way to go, because just the way how many projects have died or for various reasons, I think people are going to take flight to safety. So honestly, like, even if the yield is not like the biggest out there, right? Like, people, I think, are going to weigh heavily safety and security, kind of like someone who makes a dividend stock portfolio, where they may not chase that 10% yearly yield. They may go for the 4% because they know that it's more, it's not as safe and secure. So I think that's a good call on your part.
Yeah. Like I said, so Zephyr is not the most capital efficient system out there. But again, if you're a stablecoin protocol, it's worth...
Right.
It's
you want to be stable.
Slow and deliberate. Exactly. If you want to be around for the long haul. But you mentioned, even if we don't deliver, the highest yield, well, let's just move on to here. Okay. So today, our variable APY is around 7.5%. So that's still decent, but it's actually the lowest you can see on the chart. It's the lowest it's ever been. And that's because the Zeph price is depressed. So when Zeph is low, the dollar value of the yield minted from that 5% block reward is lower. But there's a couple of things. So if we look here, okay, so the trailing 12-month effective APY is still north of 21%. And even at our current rate of 7.5%, which is the bottom of where it's ever been, that's still roughly double the leading competitors like Athena and Sky and Ondo, which are sitting between 3.5% to 4.5%. So even in our worst stretch, we're still outperforming the top yield stablecoin competitors. So when Zeph recovers, even just a modest amount, those numbers, they reprice upwards fast. And you can see like the average of the past couple of years has been between 25 and 35%. And if we remember Luna, it had people flooding in because of a 19 to 20% APY. So it's very interesting once you start to do the math. Let's see. So yeah, the yield mechanism, it went live back in October 2024. So that's about 19 or 20 months. It's delivered an all-time return of over 90% since, with the past 12 months is 21%. I should mention there's no lockup periods either, which is super important. So I myself have been victim to staking and 3 weeks and you can't get out. So yeah, this is super important if you're treating stablecoin yield as a lower risk position. You actually want to have access to your capital. So you can enter and exit anytime you like between ZSD and ZYS. There's, no lockups. So I want to get into the mechanics of, basically with ZYS, this enables a positive feedback loop for Zephyr protocol. But I think before we do that, we should round out this section, which is the last asset, which is ZRS, which we can jump into. But before I steamroll ahead, Future, have I missed anything?
No, thank you. I think we'll let you move on, and then if there's anything, I'll come back.
Okay. Making sense at the moment, guys?
I understand. Yeah. Continue.
Cool. All right. So this is the final asset we'll talk about. So this is ZRS, the reserved share. So at first glance, this one is probably the most confusing pieces of the ecosystem. So it's worth spending some time here. So essentially the reserve share, it's representing your stake in the protocol's reserve and a claim on the excess equity within that. So the best way to describe the ZRS concept is with a house and mortgage analogy. So I'm sure many of you guys listening, you'll be familiar with this sort of setup. So in this example, like let's say you buy a house worth 800K. So the house is the asset. You put 600K down, which would be your equity, and you borrow 200K as a mortgage, which is your liability. So let's say the house goes up 50% and it's now worth 1.2 million. Well, your mortgage is still 200K because it's a fixed number, but your equity jumps from 600K to 1 million. So when you think about it, the house moved 50%, but your equity moved 67%. So you earned more percentage-wise than the house did because the liability, the mortgage, is remaining fixed. So if you flip that, the house drops 50% to 400K. Your mortgage, it's fixed. That's still 200K, but your equity falls to 200K. So that's a 67% loss on a 50% move. So it's the same amplification, the same leverage. It's just in reverse, and that's the setup. It's leveraged from a fixed dollar liability sitting on top of a volatile asset. So the leverage it's not coming from a margin loan or a perp. It's basically the math of the balance sheet, and it cuts both ways. So that's making sense, right? So
I understand.
Yeah. So Zeph's reserve is essentially the same structure. The pile of Zeph in the reserve is the house. The circulating ZSD stablecoins, they're the mortgage. It's our fixed liabilities. And the ZRS is the equity because it owns everything above the ZSD liabilities. And it also takes the downside first. But ZRS also has a few extra incentives in that holders receive 30% of every block reward plus all the protocol fees on top. So when Zeph price goes up, the reserve goes up, but the ZSD liability is fixed in dollar terms. So that equity layer is capturing all the upside above what's owed to the stablecoin holders. So essentially, ZRS goes up faster than Zeph. And when Zeph goes down, the same thing happens in reverse. Your liabilities aren't shrinking, but your equity is getting squeezed. And so ZRS falls faster. That's essentially how to think about it. ZRS is leveraged Zeph, but there's no perps and it doesn't have liquidations. So
do you need ZRS from like an accounting point of view and how the protocol works? Like, does it actually have to trade? Like what?
So ZRS does trade on I think one market, which is non-KYC. I think has it, but for the most part, it's sort of just you do it at the protocol level. You deposit your Zeph into the reserve. It's technically tradable. Any of the assets on Zephyr are tradable on an exchange. Back in the early days of the protocol, it went for a huge premium on the live market.
That's what I'm wondering. Like, everyone in crypto are leverage wars. So they're like, I don't want to own Zeph. I want to buy ZRS. And I'm wondering, would that drive it up, trades at a premium? Could that introduce Like if you get rampant speculation, ZRS, could that affect anything? Like if it's more volatile than what the math suggests, or is this
Well,
fine? It can be as volatile as it wants, doesn't affect anything else.
interesting. I mean, the thing about it is you can't mint more ZRS once the reserve ratio is above 800%. And that's so it doesn't dilute the existing holders. So you're not sort of minting new ZRS and putting it on the market if we are seeing huge sentiment and surge into the Zephyr protocol. Future, did you want to?
Yeah. So the other thing is like nobody would pay more or less for what it is on the protocol. Because like, just to be clear, you can basically get ZRS by just swapping it to ZRS, or you get ZRS by swapping Zeph to ZRS, right? And you do that in the wallet. And so it has a certain price. Like you can trade it. It has a value. It has a dollar value, right? And if I were to pay more on like a different market than off of the block, like just not directly in my wallet, basically, then there would be no real reason to pay more or less for something like that, because arbitrage would kick in and somebody could just go over to the wallet and swap it back to Zeph, right? In that case, well, if it was allowed, right? You actually can't swap ZRS back to Zeph when the collateral is below 400%. So there may be some like difference in price at that point. But generally speaking, the value of ZRS will stick to the actual value that it has, just because of the way that arbitrage would happen. Yeah.
So, just so I understand, that maybe there's a case then not to add every single, like, let's just wave a magic wand, Zeph, we got a chain client, add it to THORChain. You probably wouldn't want to add a certain asset because it would be then directly connected to the asset that it, on a protocol structure level, should not be, you could swap back and forth from, but on THORChain, you easily could do it. So I wonder how that works. If you just, there's some assets that just should not be liquid.
Well, yeah, I mean, that's a really good point, actually. But I because it's getting bridged over to Ethereum, you're going to have wrap ZRS. So actually, you will be able to trade it and buy it when you can't get out. So basically, right now, ZRS holders can't get out of that position because the collateral is below 400%, right? And it's very close to 400%. It could easily be above that, and then they could mint into Zeph. But when you have wrapped versions, or if you have the native one on THORChain, for example, you'll still be able to trade it, right? And I think that makes sense. Like that would actually be very valuable in some ways, and maybe there would be some premium or some discount as a result of that. Yeah, that's going to be interesting when it goes to Ethereum.
Yeah, you would see the premium when ZRS is locked. When the reserve ratio is over 800% and people wish they had it because of the leverage effect, and they can't mint it natively, that's when you would see a premium on the open market.
One other thing I would just point out. Go ahead.
I was going to say the ZRS. I'm sorry, just confused me. So the native asset on the Zephyr chain, that is always locked, but the derivative on ETH, that's the liquid version, right? So we could actually, if my understanding is correct, we could not actually have a ZRS layer 1 pool on THORChain. Am I correct, or am I bungling that?
I don't see why not. You definitely would be able to. There could be a price deviation, but I'm sure someone would probably come in and eat that up, and then it would arbit back to the price being the same across the board, if that's what you're kind of asking about.
Well, okay. So ZRS I'm sorry. This is how my brain works. Is a reserve asset, right? But it's a reserve asset that people can hold. And I'm sorry if I missed that. If you explain that, I'm taking notes and stuff.
Yeah, no, it's a bit confusing. So let me put it this way, actually. So we refer to it as like a note that you get from the bank when you add Zeph to the bank, right? But it has a value. It trades, right? And you can sell it and buy it. You can do that on non-KYC right now. And the thing about ZRS too is it's a swap rate where right now it's very close to 1-to-1. So right now, if I want to get 1 ZRS in my wallet, I would swap 1 Zeph. And then as the price of Zeph goes higher, the rate of ZRS could go from 1 to 2. Its all-time high was like 1.9 something, so we'll say 2. So when I swap ZRS back to Zeph, I'll get 2 Zeph. And because of that's how it's tied, just like this mortgage example, basically now not only do I have more Zeph, I have 100% more Zeph, but the price of Zeph went up. So the actual like monetary value of ZRS goes up in a leveraged way, very similar to this mortgage example, but it has its own value. So you can trade it and sell it, but it has a swap rate. And that's what we call it. It's the ZRS rate, which is the ratio that you will swap between Zeph and ZRS at. So you'll either get more or less depending on when you get in. And because when the price of Zeph goes down, the rate goes down. So like I said, it's close to 1. It used to be close to 2. So now if you buy Zeph, you can get a lot more ZRS. And if Zeph goes up, you're going to get a lot more Zeph. So you're just swapping back and forth between those two assets.
Got it. Okay.
Yeah, well said. So the cool part is that now the protocol is it's designed to incentivize ZRS minting in exactly this state when the reserve ratio is under 400%. So if you're minting ZRS, you're depositing Zeph into the reserve and you're raising the reserve ratio, which is precisely what the system wants, and so it's incentivizing you to do it. And like I said, when it goes to very high rates, like 800% and above, the protocol restricts ZRS minting, and that prevents dilution of the existing holders. So yeah, there's those circuit breakers or reserve ratio tiers at both ends. But today we're open and structurally incentivized to mint ZRS. If you were to do that, that would mean that you have a thesis. So your thesis would probably be Zeph right now is closer to a floor than it is a ceiling. And if you were to say that, then the protocol's math would also agree. So what do we have? Yeah, that's the reserve ratio mechanics. Okay, so we can move on. So that covers the details of all the assets in the ecosystem. But if we sort of take a wider view, hopefully you can appreciate how Zeph is designed as a bit of a positive feedback loop. So all the assets are directly interconnected rather than just having 4 tokens in isolation. So if you've been in crypto for any amount of time, then here we go. So you've probably no doubt heard the term flywheel 1,000 times. And hopefully through this discussion, it's become apparent that Zeph has taken a methodical and conservative approach to, ensuring sustainability. So because of that, we've got the mechanics in place that open up the door for an actual flywheel. So this isn't just, a marketing buzzword that doesn't hold up. So, okay, so Zeph's stablecoin yield engine, it delivers some of, or if not the most sustainable high yield in the industry. And again, it's been proven over 19 months in the real world. So if we take this as a starting point, this graphic, so the high APY on private stables, that's an attractive value proposition for just about everyone. And if we start with what every yield farmer would have to do, to earn yield, they need ZYS. To get ZYS, they would need ZSD, and to get that, they would need to lock Zeph into the reserve. But to do any of that, they first have to get Zeph off the open market. So every person chasing the yield, they're becoming an inadvertent buyer of Zeph, and then they're taking that Zeph out of circulation and they're locking it into the reserve as collateral. So it's not being sold back onto the exchange. It's bought and it's locked away. So if you enter a yield position, that makes Zeph more scarce. And if we look at the protocol, every block, the mining reward gets split. So that's 65% to miners, 30% to the reserve, which is the same fees that accrue to the ZRS holders. And the 5% gets converted to fresh ZSD and dropped into the separate pool, which is the yield reserve. So the growing yield reserve, that's what makes each ZYS worth more over time. So if we look at the flywheel again, more people want yield. They have to buy Zeph to get in, and buying Zeph pushes up the market price, of course. And that supply is getting locked into the reserve, and it shrinks what's left circulating. So the yield is paid from the 5% block reward. So when Zeph's price goes up, that 5% is worth more in dollar terms, which again boosts the APY itself. So yeah, a higher yield would pull in an expire, and then the loop continues. And for every loop, the reserve is actually getting bigger and more over-collateralized, not less. So Dr. Future actually has made a few videos on this topic, and he's laid out an extensive thesis, but you probably want to jump in right about now to talk about that.
Definitely. Appreciate that. So basically, what you want to know is the only way to get ZSD is to swap it in the wallet with Zeph. So you have to get Zeph. So I go and I buy Zeph and I'll swap it and get some ZSD. Now, let's say I have a lot of ZSD and I want to put it on a third, party market, right? Like some order book somewhere. Somebody could go buy that ZSD and they wouldn't have to touch Zeph. So once it's in circulation, of course, anybody could buy it. But in order for it to first be minted, you have to buy Zeph, right? And when you buy Zeph and you swap it for ZSD, you're locking Zeph into the bank account. When it's in the protocol, it's not for sale. You're basically locking it away. There's no lockup period. You could pull it out at any time, right? In order for there to be ZYS, you need to lock up ZSD. If ZSD is locked up, Zeph is locked up. And in order for you to do that process, of course, you have to buy Zeph. So if Zeph is going up as a result of people wanting to get ZSD or wanting to get ZYS, then the price of Zeph is going higher and it's getting locked away so that it's not for sale in the markets. So because there's a finite amount of Zeph, as that Zeph gets pulled off the market and locked away to mint more ZSD or ZYS, then ultimately there will be a smaller supply available for sale, and the price could technically go higher or lower, of course. And so because ZSD, or I should say because ZYS, which is the yield share, gets its yield from block emissions, if the value of every block goes higher in monetary value because the Zeph price is going higher, then that 5% is going to go higher and higher, and it's going to pay out those ZYS holders more and more value. That's like what I said before. If the value of every 2-minute block is $100, 5% of that is $5. If it goes up to $1,000, that's $50. So $50 is paid out every 2 minutes to ZYS holders. Right. So that's kind of the basic idea that you want to wrap your head around, is just the fact that ZSD and ZYS, if there is any interest in getting those, and again, ZYS is historically 20% APY. It can't go down in value based on the structure, right? That's that analogy of the pool, the public pool. And you saw the graph going up, and you see savings die, for example, goes higher and higher. It doesn't go down. It only goes up in value. It just doesn't go up faster or slower. And the reason for that is because it's basically just a pool of stablecoins, and it trickles in more stablecoins, right? Every 2 minutes, the protocol will swap 5% of that Zeph into ZSD and then put that ZSD into the ZYS pool, and that's split for all the ZYS holders. So one other thing, though, that I would point out is that because there's an Ethereum bridge and there's going to be wrapped ZYS on Uniswap, for example, the liquidity that's in that Uniswap pool essentially will allow anybody on Ethereum to easily swap USDT or USDC or Ethereum into ZYS, and then they'll get wrapped ZYS. And they won't have to touch the protocol at all. They won't have to go into the wallet. They won't have to swap Zeph to ZSD and then swap ZSD to ZYS. They simply will use like MetaMask or whatever they want to just swap into wrap ZYS. And so maybe they can get access to that quickly. Go ahead.
Yeah, I think we'll unpack the bridge in just a second. But I think one more detail just back on the Flywheel is it's a cool detail of the protocol. So if you want to take profit on Zeph, you actually don't have to dump it on the exchange either. So you can mint ZSD right within the wallet. And that would mean that a user could exit volatility by switching to ZSD, and the Zeph that they convert is getting locked into the reserve instead of hitting the order books, which pushes the market price down. So if you want to de-risk and go into a stable, you're not causing any sell pressure, and the circulating supply of Zeph shrinks. So that's a pretty cool feature. De-risking actually strengthens that flywheel. So yeah, we can jump onto the bridge.
Maybe I would just hit on that a little bit one more time, actually, just to really clarify for everybody. So like in the wallet, if you have Zeph, right? And let's say like historically, if you have Bitcoin and you want to sell it, like let's say you have a lot of Bitcoin, you could push the price down when you sell it. If you want to go into a stable and sell your Bitcoin, you will modify the price. But the way that this protocol works is that if you have a lot of the base token or coin Zeph, and you want to go into stables in the wallet, when you do that, there is no price impact whatsoever. There's just a fee. So if you wanted to sell that on the markets, you could push the price down, or in the wallet, you could get ZSD and the price wouldn't change as a result of that. And not only that, but Zeph would be going into that bank account and getting locked away. Right. So there's a lot of like real interesting mechanics that are in place that can secure the stablecoin and allow for adoption.
So we've sort of alluded to the bridge in a few sections. Now, I'm totally aware of the irony. It's not lost on me as I talk proudly about a Ethereum bridge on a THORChain podcast. But I should mention that the work for the bridge, the devs have been at it for quite some time. It began in July, August last year, so well before THORChain announced any plans for Monero support. So if you'll bear with me, we'll just have a bit of a rundown.
You're fine. Don't worry about it. And I actually do have a question from the audience about this bridge, but carry on, and then we can get to that later.
Okay, sweet. Yeah, so by opening up an EVM bridge from Zephyr to Ethereum, well, first and the most obvious thing, it's going to enable all of Zephyr's assets to have wrapped versions on ETH. So Ethereum has the highest TVL for stablecoins, and it's where most of the yield farmers play. So it's going to get quite interesting when they suddenly have access to wrapped ZYS. So yeah, the first reason for us to open a bridge was all about accessibility, because right now, getting the yield is a bit of a grind. If you're not super well versed in DeFi already, you have to buy Zeph on an exchange, you set up a native wallet, and you have to send that Zeph to your wallet, and then you swap the Zeph, mint ZSD, and stake that ZSD for ZYS. So yeah, it's, in practice, it's not that complicated, but we can definitely lower the amount of friction to onboard new users. So that's the bridge, which will turn that multi-step journey into essentially a one-click access directly on Uniswap. So this means it can be super simple for anyone just wanting to swap Tether or USDC directly for wrapped ZYS. That's lowering the barrier of entry considerably.
Can I interject real quick?
Yeah.
If this is an ERC20, I don't see why we couldn't just add this to THORChain right away. Maybe there's a disadvantage to that, I don't know, but it's just simply a router. I think there's still a whitelist process, but we already support Ethereum. We have a router. We could add this, no problem.
Perfect. I guess it would just be a matter of setting up the liquidity pools.
Yeah, that's it. That'd be it.
Yeah.
And the minimum for the startup pool, there's no dollar amount. It's 10,000 runes. So I don't know what the price is in runes. It's like 30 something cents right now. Assuming that the network was, you can't really do it right now because we're not churning. We're getting that fixed as you saw in the update. But well, that's about $3,000 or $4,000 or $5,000. I don't know. Pretty easy. So it would be grouped, right? It'd be rune, equal parts rune, equal part the asset. So that whatever figure it is, just times it by 2, and you'd have a pool on this right on THORChain, and you generate, you'd have instant access for all various layer ones. So maybe that's
you heard it here first, guys.
Later, but carry on. No,
that's the second order of effects.
That's the power of THORChain. We don't care. We just have everything. Power of THORChain, baby. Carry on, boys.
So yeah, when we go to Ethereum as well, it's actually there's some other downstream effects. Basically, it means we won't have to develop a bespoke mobile wallet, which is coming, by the way. But people are already familiar with MetaMask, Trust Wallet, suddenly, yeah, they can have the wrapped Zephyr assets right there. And another pretty cool feature is that it could open more access to centralized exchanges. Now, personally, I would always opt for using DEX rails where possible, but look, realistically speaking, CEXs, they're still a big part of the game. But we have seen many privacy coins, like Monero in particular, they get delisted from these platforms. So having wrapped versions of Zephyr on Ethereum, that means they'll actually be transparent. So therefore, they won't be subject, to the same scrutiny that other privacy projects are getting. So, there's a more viable path in that regard to getting listed on some of those bigger platforms. And if people want full privacy again, they could just bridge back straight to the native chain. So it's kind of the best of both worlds there. But yeah, I think just
I have an
touching on
audience
the
question.
Yep.
You mind if I interject? Okay. This question is from Sam. I want to say just in case, because I think this is topical. Sam wants to know, does the team, the Zephyr team, believe the EVM Bridge launch is enough to attract meaningful external liquidity or additional ecosystem partners required before Zephyr can scale significantly? That is the question.
Yeah, well, I guess it's a question of when you look at stablecoin yields on Ethereum, look at the top players that we sort of looked at previously. So Athena is one of the biggest giants currently, and they're delivering just over 4% yield. Zephyr's yield is coming in at 7.5%, and it's the lowest it's ever been. So if you can one-click access that when the Ethereum Bridge launches, and the worst rate is 7.5%, and historically it's been well into the 30% range, well, I think that will be adoption right there. It's all about accessibility and being able to be able to access it on Uniswap.
Yeah, I
Perfect.
agree.
Okay,
I
awesome.
don't think
Carry
that
on, good sir.
it's going to require any type of partnership. I think that as soon as it's getting indexed by like DeFi Llama, and you can see that there's a stablecoin that has yield, even just a little bit of interest in that will start to drive the price of Zeph higher. And that's because the Uniswap pool, if you start to take out wrap ZYS, if somebody wants wrap ZYS, right, they basically will be pulling wrap ZYS out of the Uniswap pool. But the way that the bridge is going to work is it's going to replenish that pool automatically with arbitrage bots in the background, which will take Zeph off of the market and automatically swap it into ZYS and wrap it and then refill that liquidity. So if there's a little bit of interest in wrap ZYS, it's going to push the price of Zeph higher in the background through this bot mechanism. And then the APY can go higher, and then people might start to notice that. And it's very easy to get. I just swap it in MetaMask or whatever. So we think that it'll be probably a little slow at first, but it'll probably, gain attention relatively quickly.
Yeah, and when we talk, when that question asked, I think, was it about partnerships? Well, visibility is a huge thing for the bridge, as Future sort of said, and it's a bit underrated. So Zeph right now, it's a private layer 1. The anonymity is the whole point, but it means that Zeph is essentially invisible to every dashboard that's out there, because you can't display a chain's TVL or the yield stats the way you can with transparent ERC20s. So by having Ethereum versions of ZSD and ZYS, then suddenly our yield metrics will actually start to surface on those platforms. So yeah, again, the DeFi Llamas of the world, they're going to act as a big old billboard for us. And by virtue of having our sustainably high APY, inevitably they'll start trending up the charts. So yeah, I think this is actually quite a huge step forward in terms of adoption as well as accessibility. And again, if people,
awesome.
if people don't want to sacrifice their privacy, they can always bridge straight back to the native chain. So again, best of both worlds. We are also getting audited by a third party. I'll sort of skim over that. We've talked about it previously on some live spaces. I can get into the weeds of it if you guys want to hear, but it's a bit sort of talking shop.
I'm not worried about the audit. Let's understand Zephyr, just more surface level.
For sure.
Yeah. But if people
Okay.
listening are interested in the audit, they can go find it on your website or whatever, right? They can dig into that.
Yeah, exactly. I mean, the cliff note is, we're getting audited by a third-party security firm, Cypherin. So it will be launching, with a third set of eyes. So yeah. But I'm super conscious, I've spent probably far too much time talking about bridges on a THORChain podcast of all places. But again, the work for this started middle of last year. So thanks for bearing with us there.
It's totally fine. This is your, you guys are here to educate what Zephyr is, right? And with THORChain now being able to add, XMR via the Frost TSS, thanks to Luke Parker, again, shout out, we can, now there's another conversation to be had here. So don't feel bad. You are here to educate your protocol. Please carry on. No big deal, man.
Totally. Yeah. Well, I mean, you mentioned having, so you will be able to integrate the wrapped assets, the Ethereum side, but because you guys are going to roll out Monero, well, potentially a native Rails for Zephyr could happen at some point in the future. So, basically, if we had ZSD moving over THORChain Rails, we could retain its native privacy in a way that, the EVM bridge couldn't. So, that would be, excellent for us in terms of our ethos, because, we are a privacy protocol, and that's not a small distinction. It's, it's a whole identity. But a few other reasons why I think I'd love to see support for Zephyr on THORChain, and that's we've talked for the past hour or so, and I've talked to Randy and Chad previously. It's pretty clear that both of our projects are on the same mission, which is truly permissionless finance. So Zephyr is well on board with that, as well as THORChain. You guys are clearly still one of the few projects who actually gives a crap about having cypherpunk roots that crypto is built from. The fact that you guys have taken the hardest path possible by connecting native chains and, you're not settling for anything less, I think that alone speaks volumes. So, and I know I've seen the recent news and we've had our share of challenges. They just come along the way, right? So it's inevitable people are going to throw stones in your direction, but that's just what happens when you push the boundaries of any new tech. THORChain's, I think it's a crucial piece of infrastructure, and the entire industry has benefited from. So as a whole, I think you guys should actually be given way more flowers. But the fact that you're bringing Monero cross chain, you guys are serious about financial sovereignty. So Zephyr being built on Monero, I think it makes sense down the line once we see a successful rollout of XMR. I'd love to get that ball rolling.
Appreciate you.
Before we get into talking about the Zephyr and THORChain, I just want to ask more about Zeph and ZSD. You went through how it works on the protocol, the different tokens, how they all interrelate with each other. But where's the outside money coming in? I understand your internal economy, but how does this tap into the external economy? Why am I buying Zeph? How am I using ZSD? How are we, how are you branching out into the real world? How is outside money coming into the Zephyr protocol?
Well, that would be the next challenge in terms of getting payment providers and payment processors to accept ZSD. That's the next sort of hurdle. At the moment, I would say that the case for adoption is to earn high yield sustainably on private stablecoins. So people would enter Zeph for that reason. And then hopefully down the line, we actually have some community builds that are happening, payment processors and merchant directories, similar to XMR Bazaar.
How do you buy it right now, though? Sorry, Kenton. If someone who has right now, it's not on THORChain, right? You have the EVM bridge thing, obviously, but how does someone right now, how do they get Zephyr? What are the options available?
Right. So right now we're on a few exchanges. MEXC would be the biggest one. Then there's XT, and then CoinX and non-KYC. MEXC would be the go-to, and you would buy Zeph. There's a Zeph and USDT market. You'd get that. You'd send that Zeph to your own private wallet. We have a GUI wallet. There's also a web version or a CLI if you're familiar with that. But that's the easiest way to onboard, basically, through MEXC or XT.
So, and you guys don't have a native wallet or just a native mobile wallet?
We do. Yeah, we have a native GUI and CLI wallet.
Okay.
And there's also a web wallet, which is a graphical user interface as well.
Okay. Because like something we talked about this the other day, is on THORChain having stable coins be feeless. So like for like, if somebody wants to swap between say USDC and USDT or DAI, it's free on THORChain basically.
Oh,
And
cool.
so the idea is that you mentioned this earlier, that stable coins are the real use case in crypto right now. And I think that's the adoption, that's the gateway drug for the world getting into crypto, is people using stable coins, to buy things like in real, like actually use it in real life. And so I'm just wondering how it would work with ZSD, that if people want to go from ZSD to Tether or Tether to ZSD back and forth on THORChain, they can do it feeless. And if ZSD is private, maybe there'd be more demand for that. And sorry guys, I'm just like, my brain and my thoughts are kind of slowly
Yeah, no,
catching up
that's
to
all
each
good.
other.
It's a lot at
But
once.
I'm trying to piece together how this would be great for you guys. That you need people starting to want to accept ZSD payment in it, I guess. But you could basically, your mobile wallet, if you maybe turn into a point of sale as well, so that you have the THORChain API integrated. People can come into your wallet and swap their Tether and Circle for ZSD for
Yeah.
free because it's being swapped on THORChain on your wallet. And then now they can go spend and do whatever with ZSD in your wallet. And then a merchant just has to download your wallet. And same thing, they can receive ZSD. And then through the THORChain API can be converted into Tether, Circle, Bitcoin, whatever. Are you following me? Is this making sense?
Yeah. It's just all abstracted away on the back end, right?
Yeah.
I think there's also a real gap that ZSD and ZYS fill in the THORChain universe, because there's obviously a ton of guys in your ecosystem that want a truly decentralized stablecoin. But from a dollars and cents perspective, if you have an LP with ZYS as one of the sides on it, then I would say that's a magnet for liquidity, because LPs, they're going to earn their swap fees on top of a high stablecoin yield, an asset that just is continuously increasing in its value. So that's a pool on THORChain that would be genuinely different, I think.
Well, that's something we should talk about. Maybe we should talk about Zephyr and THORChain. This is one of the hangups right now, guys, is over the years, THORChain continues to evolve. Every year, I'd say it's completely different than the year before. And this year is no different. It's things are evolving, and it's been a long-term, like how getting liquidity on THORChain. How do we attract it and how do we reward people? Blah blah blah. It's been like an ongoing issue, and right now the way things are structured is the protocol owns the majority of the liquidity, and the traditional liquidity providers, and just through designs in the past are unique to THORChain, what they really need is a rune price to go up. They don't need any more yield per se. And so what we've found is sending yield to the pools just doesn't really help it grow much, or give us sticky liquidity. And for the last 6 months, again, something unique to THORChain, the fees have just been going only to the node operators, to the nodes and bond providers. 0 fees have been going to the pools for like 6 months.
Right.
And so we're like, again, this is just intricacies of THORChain and we don't have to get into, but it's something we need to fix. And we need to start sending fees, something to the pools, right? We can't have 0 money going to the pools. The liquidity won't grow. And what I'm pushing for, and I think we're going to find out here in the next couple of weeks probably, is where the real appetite is for the network to like, do we really want to stick with the traditional liquidity pool model where we send fees to the pools to attract third-party liquidity providers, or instead of sending fees, the protocol just those fees go to the protocol, and the protocol becomes a liquidity provider, and then and that liquidity is sticky, it never sells, it's there forever, and we don't have to worry about trying to attract outside capital. We just become our own liquidity provider, and then we don't have to worry about liquidity, you know, like pulling out during bear markets or whatever. It's there, sticky.
Mm.
And so the reason I brought all this up is because it kind of deflates your idea, and it might make you guys think twice about listening on THORChain, because part of the deal, kind of what we're telling new blockchains, is that I'm pushing for it. I don't have to communicate, but I am pushing to go towards this protocol-owned liquidity model where we give zero fees to liquidity providers. And so if you're a new L1, providing liquidity on THORChain is basically a cost for you. So no different than providing liquidity on any decentralized exchange. They'll want 50, 100 grand, whatever deposit. You know, Binance wants your arm and a leg and your firstborn child. But so listing on THORChain would be a cost as well. But I would argue a much lower cost because, okay, you're not getting any LP fees, but you do own the liquidity. It is yours. You're then just exposed to permanent loss, and you're not getting any fees to offset it. And so, you know, but in theory, you could yank your liquidity whenever you want and accept the permanent loss, whatever that happens to be. But there's no one on THORChain. There's no automatically dumping on you, selling, driving your token down, nothing like that. You know, it's in the pool. And like Denny said, to get a pool going, like usually the way it works is with the new protocol, the treasury seeds a pool with a few grand, and then just to get it live. But really just, you know, you need about 50, maybe 100 grand in the pool for it to, you know, to function properly.
For sure.
And then the way the protocol on liquidity will work is as the fees of the revenue, fees from the protocol goes into the pools based on how profitable the pool is for the protocol. So the Zephyr, you might start with 100 grand you guys put out into the pool, but if your pool is very active and generating lots of fees for THORChain, that will attract more protocol-owned liquidity. So the protocol will invest in your pool, and maybe the pool gets to 500 grand, and 400 of the grand is owned by the THORChain protocol, 100 grand is owned by you, and then maybe you pull it out. That's when you withdraw, and then you've got your money off the table. You have no more at risk. The THORChain owns that liquidity. Everyone's happy. Or maybe you decide to leave it because you want to maintain the liquidity because you want that good volume going for your protocol. But this is the long-term play, you know, the long-term idea. So does all that make sense? I don't know if that,
yeah, it does. I mean, it's a bit to chew on, but it makes sense. It's,
can I add
a
some
viable path
here? Let me ask. So, what Ken says is completely correct. So here's the thing with Ethos with THORChain. You know, we had LPs, which were just individuals depositing to THORChain, right? But to Kenton's point, that liquidity was not necessarily sticky. It's contingent on whether the LP wants to remain, right? And we did have fees going to the pools. But THORChain's point is we cannot have any third-party dependencies whatsoever. And actually, the LP structure could be argued back in the day. I mean, 2021, 2022, right? This was actually a divergence from that ethos, but protocol-owned liquidity wasn't the thing, right? So how do you fix that problem? Well, protocol-owned liquidity, this is great because the protocol owns it and it just stays forever. And so there's a consistency there. It's easily to be modelable. There's no more of the whim of individuals adding or pulling out liquidity. And to like Kenton's point, right? Like we need that initial seed. And then once the pool gets established, 50, 100 grand to have some decent volume, the POL can get to a point, obviously, where it can be way bigger than the standard LP of, like, let's say Zephyr. And then you can pull out that liquidity if you choose, or stay, as Kenton says. But then the liquidity is always there. And you
Gotcha.
never have to worry about it going anywhere. And that's the point, right? Like, where this, like, we want the liquidity to be a constant and actually perpetually growing, somewhat flywheel effect, right? That's always adding THORChain. So that's kind of where the thinking is. It isn't like we don't want to give fees. It's just what makes THORChain more hardy and more resilient in the future. That's the thinking there.
Yeah, no, thank you for that.
Ideally, Zeph native would be on THORChain, right? And ideally, we as a community would be able to seed that, because, obviously we want people to be able to access it in a decentralized way, to be able to get the native asset, not like a wrapped ERC20 thing. And, like you said, that as it becomes more owned by THORChain, then that liquidity can improve and it's sticky. So I think the community would definitely be behind that.
Yeah, and it's only a permanent loss, right? Oh, go ahead, Kenton.
Well, only, I mean, if
assuming there's not a huge variance,
right? Yeah, like in theory, this is always the original theory of THORChain, is that the room price is reflective of the market. So the tokens should go up and down together, right? And so as long as you're going up and down relatively similar, then the impermanent loss is lessened, right?
Yeah.
It's only when you have that stark divergence, right, that impermanent loss gets crazy. Yeah. So, I mean, in a crazy world, if the Zeph token price takes off, wildly outperforms Rune, you're gonna have a lot of impermanent loss, right? And then the other thing, just to note, is the way that the protocol is going to direct the fees into the protocol owned pool, liquidity pools. It will be a function of the volume, like the fees generated on that pool, right? So if the Zephyr pool is only making, like, when you average it out, say 5 basis points versus a pool making 15 basis points, all the money is going to go towards the pool of 15 basis points, to where it's more profitable, right? So the one makes sense for the protocol. And so it's not necessarily an automatic, you're going to get protocol and liquidity going to your pool. If it's a dead pool, it's not going to get anything. So just
totally
put that out there too.
Maybe one thing I would also point out here is that, like, if ZYS was actually added to THORChain as a native coin, then even if, like, the price deviated slightly from the what you can get in the wallet, that would always get arbed back, right? So the demand, because it basically it has 8%, 20% over the last 12 months, right? APY. If there's any amount of interest in getting that, it could push the price slightly higher on THORChain, but then somebody could kind of step in and arb that back out, and through that whole process, you're going to get more activity, which could end up leading to providing more of that stickiness, because the fees are going to start to collect for the node operators, right? So something like ZYS could be very appealing, and it wouldn't have that type of impermanent loss that Zeph would, because Zeph is much more volatile, whereas ZYS is going to go up at a certain rate.
Yeah.
Yeah, arbitrage volume is the same as regular volume. Go ahead, Kenton. Sorry, I stepped on you.
Yeah, that's what I say too. And like half to 3/4 of the volume on THORChain is just simply arbitrage. The nature of liquidity pools, right? You always got to balance them. So you're absolutely right about your having a difference between the THORChain price and your native wallet price, right? So yeah.
I gotta I have a Goose, Dr. Future. This is being viewed either currently or will be currently viewed by node operators of THORChain, right? And so there's just like some questions I like to ask, right? So, any asset on THORChain, it is going to be supported and ran directly by the node operators themselves. It'll be real layer 1 Zeph, right? So what is the daemon cost to run like a layer 1 version of Zeph? Is it similar to Monero? Could you give maybe a monthly figure, just so that they're aware?
Yeah, so the blockchain running the daemon, it's only like right now 12 gigabytes or something like that, I think. I'm not sure if this is answering your question exactly, but it's much smaller at the moment.
Okay. Yeah, monthly cost, because right, so any chain that, so it's all based on market, right? Any node has to run the layer one itself. And so there's operational costs to this. And so whenever we add a chain, we have to weigh the difference between, how much does this cost a node to maintain, which doesn't sound like a lot, relative to how much volume revenue it brings in. Solana is the opposite of this, right? Solana is an absolute beast to run. And so it's very expensive to run for nodes, right? So it has to be a very good chain that brings in a lot of money. So that's like the risk versus reward question that nodes have for a new chain to be added to THORChain.
Yeah, and it basically is a fork of Monero, right? So it's a block every 2 minutes. It's just much younger, and so I assume it'd be 25% of running what XMR is at the moment.
There you go.
Yeah, I think these because it's your UTXO based chain, right?
Yep.
So it's much easier, much lighter to run a full node of those. It's the EVM chains, I think, that really kill us. Like Solana, for example, that's a beast. Yeah.
Oh my God.
But this is just so you guys are curious. Maybe you guys don't know. Maybe just remind you, just so like what Denny is saying, like every THORChain node runs a full node of each individual blockchain, right? It's not like all these other protocols setups. They have multiple nodes, but they're all using the same RPC endpoint from one provider to get their blockchain data, right? Which that can become an attack vector,
Of course,
right? Or right, which we've seen. So this was always the original design of THORChain, that each individual node runs its own full chain daemon to not rely on RPC endpoints. And we've only just recently relaxed that structure a bit for Solana, because it's too much for each node to run a full Solana node. It's just way too expensive. So we introduced the ability to use RPC endpoints for Solana. And I can't remember, Denny, can we use them for other chains too? Or is it?
Yeah. Yeah, it's my understanding, yes. But it's not definitely the vision as far as I can tell. But I believe so.
So I think to make it I could be wrong. The community can correct me.
Yeah.
But I think making it possible for Solana also made it possible for the other blockchains. But
That's my understanding.
the culture of THORChain nodes is to run as many full nodes as possible as they can on their own, because that's what keeps us secure.
Yeah, and that's probably what we want, right? More decentralization, more nodes running, right? So I think the running a node should be pretty easy, and that's definitely what we would be wanting to see.
Yeah. The other thing, so another thing would just be, like, going back to Zephyr on THORChain. I'm for it. I would love it. I want my vision for THORChain. What I think it should be is that everyone should just stop going to Binance, stop going to MEXC, and start with THORChain. We want to get on, right? This is the whole point of crypto, to be decentralized
100%.
and to avoid these centralized intermediaries, right? The first thought any token should have is, I want to get on THORChain. And not just for being self-service, but self-serving. Obviously, we're THORChads, but this is how you guys tap into Bitcoin liquidity, right? Like you get access to the full depth of crypto that anyone can use. And so, you go from being gated on these centralized exchanges to now full open. There's no excuse for no one being able to buy Zeph. They have every chance possible on THORChain.
Well, exactly. I mean, the whole EVM bridge thesis was tapping into ETH's liquidity, but you get onto THORChain, then it's orders of magnitude greater. So, yeah. 100%.
Yeah. So, yeah, I would love if you guys are interested to list on THORChain. Another cost for you guys would be, you got to help do the work, like to have your tokens supported. And we've been, kind of toying with two different models. Like if the simplest thing, we just don't have enough resources to add all these different chains, right? Right. We need you guys to do it. So, like, We have been talking about, if you don't want to do the work, you can pay us to do it. So on top of like pay us a fee to get your token listed, and we'll do the work to do it. Or you do the work on your own with our guidance, but you do the heavy lifting. And then you pay for that out of your own pocket, your own devs, your own time, right? And because that's the next major hurdle, is just bandwidth of the developers to make it happen. So that's the two costs: is someone's time to write the code, and then the providing liquidity. Those are your two main things.
That's a big one too. Because we talked to this other network, not to change the subject too much, but Quai network, right? And they're different, obviously, blah, blah, blah. But we said, hey, our devs, there's just bandwidth. We don't have time. And they jumped on the chain client thing right away, and they've already pushed it. And so that's really great to see. So like the number one thing really is just the effort on like Zephyr team side. If you guys push that chain client, that really goes a long way. And maybe now with XMR, there's a lot of things we have to figure out. XMR, when it goes live, a lot of bugs to work out. But, perhaps because it is a fork of Monero, we can, there's a lot of that code that we can use. I'm assuming that's how it's going to have to be, right? So maybe there is a bit of a break there in terms of difficulty. So yeah, that's what it is, guys. Like, and again, that's why people saw in the public chat about, bridges and stuff like this. This is real layer one. That's the thing with THORChain. We don't do, this isn't like, we're not intermediate application layer. Like, we exist on the layer ones themselves. We are those chains at the protocol level. And that's the power of THORChain. That's what it matters. And I think you said this, Goose, early in the conversation, like we didn't go from the hard path. We didn't stray away. And I appreciate you said that. This is for the Zephyr people out there. THORChain is such an unbelievably complex and hard protocol. This has been such a battle to get this infrastructure to work, because the real layer one, it's a simple sentence. It is the most unbelievably excruciating, difficult thing that we've ever, that's ever been attempted. In fact, Chad Barraford said, had I known, he wouldn't have done it. He would have kept most of his sanity. But we're here. We've worked a lot of the kinks out, and THORChain runs really, really well now these days. So that's a little history on THORChain, guys. So yeah, Kenton, I love it. I want to get Zephyr. I want to get all privacy coins on THORChain, but Zephyr, you guys took the time to make this really great presentation. I think this is awesome. You sound like a really great, smart crew, and I'm looking forward to it, guys. So absolutely, I just want the conversation to continue, and let's get you guys on THORChain. Let's do it.
Hell yeah!
Yeah, we've been wanting that.
Yeah, really appreciate that, Denny. We'll absolutely link up the dev team with Chad and Boone and stuff, I suppose. But yeah, we'd love to get that ball rolling. So if there's one thing yet to take away from today, stablecoins, aside from THORChain, are crypto's killer app, and Zephyr's bringing that decentralized and private and high yield bearing. So yeah.
I did have one more question. I know we're coming in. It's been a great presentation. Someone would like to know, sorry for the background noise, guys, is stablecoin, you want to be used for payments, right? Like what's scalability in terms of throughput look like? How fast are these? If I go to buy something, does it take 2 minutes? Lock time? Is there instant finality? Could you talk a little bit about that?
That's a really great question. If I could go first, Goose, and then I'll give you the floor. So I've talked to the lead developer of Zephyr about this, and my understanding from that conversation is there's basically going to be no issue in servicing, basically the world. Once, if everybody were to be using this, it should have very good throughput. And when you send ZSD to another wallet, it shows up very, very fast. Of course, it will take some time for that first block to come through. So it can show up in a wallet before it even finds a block. And then once that first block comes in, of course, there's a certain number of confirmations. But if you're a vendor and you're selling something, you should be able to see the payment come in. And then, of course, you're going to have to trust that, the block confirmation will be such that it will not be a double spend or whatever. So obviously there's concern there. But as adoption happens and it's clear that that's not taking place with more decentralization, then you should be able to see payment pretty much almost instantly, definitely less than a minute. That's always been my experience. And I would just recommend people, send ZSD to another wallet and just see how quickly it actually shows up.
Yeah, and the fees are next to nothing. It's negligible.
And the
I love
fees
it, yeah.
come out of, are they deducted from ZSD, or do you have to have Zeph in your wallet to pay gas fees?
Whatever the asset you send, it will be deducted from that. So you don't have to have any other assets, just whatever the asset you have. It's very convenient.
Yeah, it is. Now, I think that's a huge barrier
That
to
is
the adoption.
huge.
Like,
Yes.
there's one thing that's going to hold Tether and Circle back is people have to own ETH to use it, right?
The amount of times
So,
it's happened, you've been in MetaMask and it's like you're ready to do a swap. Oh crap, I have to go to CEX now and get
yeah.
the ETH.
Such a
Oh, no.
freaking
You have to go
positive.
to THORChain to get the ETH.
THORChain.
Correct,
Watch
correct.
your mouth.
Yeah, I'm talking about 2019, of course, or 2018.
Of course.
Yeah.
Funny.
Yeah.
Yeah. I mean, that's the one thing, guys. Like, and we had a friend of the podcast, Joel, and he was talking about, how when you go to buy something, just how uncomfortable it is, like if it takes more than 15 seconds. So, like, let's just do this. I want everyone watching the show. I want you to make eye contact. I want you to look me in the eyes right now. We're going to be silent for 15 seconds, and how awkward that is. You ready? Go.
I feel like I can see your soul.
Yeah, there's like people in line behind you.
Oh,
for
that was 13 seconds. I couldn't handle it, you guys. So when you go to pay and buy something, the quicker that is, the better, right? It's like when you go to pay your card, there's still like that 7, 8, 12-second thing. It's horrible. So you guys being able to use the token itself, the gas as a gas token, that's really good. And yeah, the devs, that's really good that they're thinking about instant finality and things like that. That's the way you got to go. Just bottom line. It's got to be better than what we have in TradFi, 100%, or at least comparable.
Yep.
Yeah. So
maybe
that's
what I would add too is like there's a little bit of a handoff for privacy, I think, and decentralization. So the stablecoin is decentralized, right? Nobody can freeze it, and it's fully private. So I think a little bit of a trade-off with time, but yeah, it should definitely be fast. I completely agree with you.
Yeah, absolutely.
And in terms of sorry, Danny.
Go ahead. No.
Well, in terms of outcompeting TradFi, I mean, when you're looking at the stablecoin yields, a lot of them aren't even coming close or just sitting even with what a bank offers. So why are you going to take that smart contract risk? So I think, it's quite a compelling case that Zephyr's still, even with its pretty down in the dumps market price action recently, the fact that it's still outperforming, makes it worth it.
That's good. And I'm hoping that this podcast gets more eyes on Zephyr. And when it's an asset that, wave a magic wand, it goes on THORChain, that, you guys then are going to have direct connections, to all the layer ones that we support. And if you have someone you meet on the street who has Bitcoin, Litecoin, Ethereum, Doge, AVAX, whatever token, right? Dash, maybe Monero, say, hey, you can swap directly into Zephyr on THORChain. This is how you do it. Swap.thorchain.org when the time comes, right? That's really cool. That's really powerful, you guys. And that's what THORChain wants to do. Just connect all the different islands out there, all the amazing innovation. And then that way the market can determine who is the ultimate winner or winners, right? That's what it's about. And I really appreciate you guys went from a privacy first perspective, privacy by default. That is the correct ethos. We cannot make any compromises on this. That's how finances in our country and all countries, it's always been private transactions. Privacy saves lives. Privacy is the way to go. So kudos to you guys. Well done.
Thanks, Danny. Yeah.
Thank you so much for having us. We appreciate it.
Well, is there anything else, guys? Anything else that maybe we didn't talk about? Anything else you want to address? I want to just make sure we go one last effort here. If there's anything else you want to talk about Zephyr profile, please go ahead. Otherwise, I'm thinking this is a good time to wrap the show. How do you guys feel?
Yeah, I think that covers everything.
Yeah, I think it was pretty in depth. If anyone wants more information, you can go to zephyrprotocol.com. Actually, Future, you should probably plug your own site that you've made. Future's made some pretty cool tools for the ecosystem, which just make it a bit more accessible.
Stop sharing, Goose, and then Future can share his screen.
Yeah, sure.
I could definitely. Here, let me pull up my. So I built a website. It's ZephFlow.live, and anybody can check this out. there is, the landing page, all the good information that you might need to learn more about Zephyr. And then I also built a block explorer. Here you can see all the stats. You can see the current ZSD APY. You can see the collateral ratio and all the good details about that. You can go through the blocks and take a look and get all the details. There's API if you want to pull anything from the website. And then also there's this yield calculator. So this is the first thing that I built out. Basically, if you want to take $500,000 and put it into ZYS, what would that do to the APY? So this is the thing about how ZYS is sustainable APY, because when you want to get into ZYS, you have to push the price of Zeph higher. So if you were to, for example, mint just 50,000, right, then the APY would be 26%. Or if you minted none, right, that's right now. Or if you minted, like 1 million or something, then the APY would go higher. So as I move into the ZYS pool, if I'm buying $1 million worth of Zeph, I'm pushing the price up and then I'm staking it and I'll get 127% on my $1 million. So of course, this is taking some information that can be changed, of course, like what happens over time. You can check how many months might take place or if somebody else is minting anything, but this is pulling real data from the blockchain and it's pulling real liquidity off of MEXC to calculate all of this. So you can check that out. And then there's also this liquidity bot that I built, which connects all of the different exchanges. And there's information about, how you can basically just go onto any of these centralized exchanges and buy Zeph. And the liquidity bot will improve the liquidity for that purchase by doing basically ARB in the background. And you can see all this great information. And this is also another website that you can go to and learn more about ZSD or ZYS, I should say, and ZSD also. So this is ZephFlow.live if you're interested. And then I also made a lot of videos on YouTube, lots of in-depth videos. So if you're interested in learning more about Zephyr, it's Dr. Future 8000 on YouTube.
Go follow him.
Doctor.
And yeah, we post on X, obviously, so go follow us there and join the Discord, and that's where we post all our updates.
ZephFlow.live, ZephFlow.live, you guys. That is the site we were just looking at, and then it was Dr. Future 8000, all one word on YouTube, right?
Yes,
is that what my understanding?
Exactly.
Dr. Future. Okay. And then just so you guys know, on THORChain, we do have an app layer that's being developed by the team Rujira. And what's really cool is that these primitives are coming online. It basically gives like all the DeFi primitives that you can get on a SEX, perps, leverage trading, loans, things like this. So this is something, another whole other element to consider, something we do not have time to get into today, but I just want to throw that out there that, as Kenton alluded to earlier, THORChain is always evolving and evolving for the better. We're going to be, the idea is to make a real decentralized Binance, right? Just to throw out a decentralized Kraken, whatever you want to say. That is the goal. That's how you liberate the world, and privacy is a necessary component of that. So with that being said, gosh dang it, you guys, thank you so much for coming. This has been a great presentation from you. Kenton, is there anything else before we wrap it up?
I think I'm good. Last chance, Goose and Future. Anything else you guys want to say or bring up?
That's all covered from my end. Thanks, guys. Really appreciate the time.
Yeah, thank you so much.
Yeah. And I was checking my phone earlier. I'm in the Telegram group chat with you guys there. So yeah, we can get the conversation going. Obviously right now, things maybe give us a week or two for things to calm down on our end.
Yes.
But yeah, I think maybe it's better too to get Monero live on THORChain, see how that's working. Then we'll have a better idea of how that'll work for you guys. And you'll have a better idea. But let's definitely have this conversation again. If you guys, if you're serious of moving forward and can get things done, maybe we get Zephyr on here on THORChain in the next couple months, and then we can have you back on the podcast to talk about it.
Yeah, would absolutely love to.
Awesome.
Perfect.
Absolutely. Beautiful, you guys. Beautiful, you guys. Okay, and remember, you two, please stay with us while we wrap up, and we need you to upload on your client side for Riverside. It's a little quirk of Riverside, so please hang out with us. You guys, this has been a wonderful, wonderful podcast. I've had so much fun. Just a reminder, everybody, if you'd like to become a node operator on THORChain and you need some help, please reach out to at Runetard on X. He can help you get set up and find bond providers. Really good, you guys. For THORChain data and insights, please follow at Ray Analytics. He has a similar logo to the boys that we've just talked to. That's really funny. He does written recaps of these podcasts too, so he will definitely be doing one as well. And then maybe you guys can hammer out who should keep the logo, or maybe you can have a peaceful coexistence. I don't know, something for you two to discover. And always remember, you guys, the views expressed are solely of the hosts and guests. Any action taken based on this information is at your own risk. Past performance is not indicative of future results, and the THORChain community does not endorse or condone illicit activity of any kind whatsoever. Next week, you guys, we're going to have an amazing team that we got to meet in Las Vegas. Nano GPT. They are an AI aggregator that allows anyone to have access to AI. It's a really cool team. They have a very interesting product, simple idea, very powerful stuff. I cannot wait to talk to them. I hope everyone has a great rest of your week. This has been such a great conversation. Again, thank you to the speakers. Take care, everyone. Bye-bye.
Perfect. Thanks, guys.
Thank you. Thanks, guys.